welcome to a very special segment for our viewers to understand. As the US and China trade war escalates, with US President Donald Trump threatening an extra 50% tariff on China unless China complies in 24 hours, and China hitting back, saying that we will fight to the end after Donald Trump's fresh threat. What really does this trade war mean for oil and gold prices going forward? How should investors approach their fresh moves and fresh strategies, as it were? And what really is the fallout of US reciprocal tariffs on supply chains? Is it time for supply chains to essentially brace for more and more disruption going forward? And are equities also bracing for more volatility going forward? Well, to decode all of this, I'm joined by Peter McGuire, CEO, AustraliaTrading.com. Peter, thank you for your time. As someone who's witnessed trade wars earlier in the past, your thoughts on how this escalation in the world's two largest economies will impact oil and gold prices going forward. We have already seen US crude oil prices at their lowest level since 2021 at below $60 a barrel.
Well, good. I'd say very nice greetings from Sydney, Sakshi, and it's very nice to join you. I think what we've seen over the last, if we put our mind back on the best part of a week, it's been enormous. I mean, no one, I don't think any trader out there would have expected to see what we have experienced over this 1 week period. And now we're at a really fine point of the argument, and that is China's mindset and President Trump's mindset. Neither are looking at backing down. So this is crucial as far as geopolitics, and from a trade war perspective, it is a war. And that's an economic war. So how that rolls forward is going to be one of, I think, much concern to traders and of investors, and certainly I think the global population. So I think that there's going to be a lot of, I think, experience for everyone to see how it plays out over the next matter of weeks.
Absolutely. And would you say this really is the time to be bullish on the bullion then, as of course investors turn to gold for their safe haven bets? As far as oil prices slumping, do you think that's an India positive?
Well, it's an India positive. It's a 4-year low. It really has been a dramatic sell-off, and that's been quite dynamic as we have experienced across the energy markets. Now, there are many traders calling, is 55 the next handle for West Texas Intermediate, currently at 60. Are we going to see 55? Is that going to be the first part of it? And is it going to trade lower? I've got people that I speak to on a daily basis, global analysts, and some of them are calling, they're extremely bearish, and they're saying, Sakshi, that you're going to see 45. I'm not prepared to go out there and say 45, but we're at a very critical juncture as far as a trade war. Now, that's energy, and that's a benefit for all, certainly for an importing country like India. And that's going to drive inflation down if energy prices come off. Second point is, you said about gold prices. It is volatile, but silver is its little brother, and it was sold down the best part of probably nearly from $35 down to $28. Now, that's a dramatic fall, 20%. It's bounced back at 30. So I think gold's at 3,000 odd. And I expect volatility to remain, but we've had a bit of a bounce in Asian equities today, and that could be a good sign.
Absolutely. Global markets rebounding, including Australia's, Peter. But US reciprocal tariffs and the fallout there, supply chains bracing for more and more disruption. Your thoughts really on what this trade war could then mean for the world?
Well, the supply chains are critical because that's how, as you can appreciate, goods need to be transferred. They're either transferred by road, by sea, by air. That's normally the only ways, or horseback. Maybe I'm throwing a bit of comedy in there, but you can imagine, short distances, you use animals to transfer if you're only got to go, 2 kilometers or 4 kilometers. You might put it on the back of an animal. But traditionally, lorries, and, you only look at India as far as the wonderful highways that you've built under President Modi, or Prime Minister Modi, that you've got wonderful infrastructure. And that's now across very much the world, that we transfer goods and commodities or ship them or fly them. So I think that these supply chains, and think about critical precious metals, or more to the point, the metals that go into the likes of lithium and all of these sort of base metals and precious for the infrastructure, for technology, and for, of course, anything to do with, I think, military need to be looked at. And this is where the US could have some issues across those supply chains, and because China is a rare earth supplier, and that's a critical issue as far as how that's going to play out in the months ahead.
Absolutely. And lastly, Peter, your advice to investors at large, should they brace for more uncertainty, more volatility? What would you tell them when we're already witnessing, like you said, an economic trade war among the two largest economies in the world?
Well, if I look at Tokyo now, we're up 6%. So you can't dismiss that. That's an enormous rise in Asia trade today. So that's the Nikkei and the topics. So that's unheard of to see that, but you had a massive washout yesterday. Now, that market is rebounding, and again, no one can tell the future. No one's that clever that they can see the future. I've never met anyone. So all I know is that it's extremely volatile, and that's what I'm probably suggesting to the viewers. They need to be conscious of that. If you're trading for a short period of time, then be very conscious as far as your stop losses. Don't have overconfidence. If you're trading and you're buying physical stocks, hey, it's certainly cheaper today than what it was a week ago. So that's opportunistic buying. So there's many different ways to look at what's your time horizon. Someone 20 has a different time horizon than someone 80. You've got a lot of years ahead of you for that company to grow, versus at 80 years of age, you've got to worry about your own mortality.
Absolutely. Thank you so much for sharing your thoughts and decoding this for our viewers. Of course, a lot still uncertain, like Peter was explaining. Remember, inflation concerns also persisting, and also businesses, if they don't know what their input costs are going to be like, how are they really going to convey this to their consumers? All that really remains a big question as this US-China trade war escalates. Thank you for your time.
Thank you, Sakshi.